NewFinance is a large meetup back in Europe, but we'll start to build our community over here. So we're very privileged to have a couple of really good payments entrepreneurs in today. Our first guest is Arlyn Davich from PayPerks. So Arlyn, my first question is, you were in marketing originally. How did you end up in PayPerks?
So I went to business school. Before business school, I was working in brand management and marketing at places like Louis Vuitton, Time Inc., and Disney, and I did some PR for lots of big companies and small companies, and of all those jobs, I really liked doing PR and like sort of grassroots marketing for the small companies because you could sort of feel the impact of your work, right? So when I went to business school, I said I wanted to start a company. While I was at business school, I wrote about 20 business plans. And as I was, searching for my next idea, I sort of stumbled on financial services for what at the time was being called the and underbanked, right? We've sort of moved away from that vocabulary, but the marketplace was call it 60 to 80 million people in America that live outside the traditional financial services. Very, very large, to a business school student, like eyes light up, very, very large and inefficient market. These folks are spending, $90 billion a year in financial services, which averages to about 10% of their annual income. So very large and inefficient space. So I started digging into that, found some opportunity and was very interested in prepaid debit cards, which were a small segment of that 90 billion, but really a good product for consumers, a lot of opportunity to improve penetration and utilization of those products. And so with that, wrote a business plan with the idea for PayPerks and started it shortly after graduating.
So, but how would you describe the exact market problem you're trying to solve? What is the main issue with this group of people?
So PayPerks is trying to help solve the inefficiencies in the financial services space for both low and middle income consumers and the financial institutions that are trying to serve them. To date, the way we've approached that problem is with trying to help consumers who have historically been cash-based consumers understand the value prop of electronic payments and encourage them to utilize their first financial instrument, which is typically a prepaid debit card, encourage them to take that product, adopt that product, and use it in ways that help them maximize the value of that product. So typically helping them save money on check cashing fees, save money on ATM fees, increase the convenience and safety and security of managing their money.
So their issue is that they're unbanked, or that they don't have access to cards?
So with 70 billion people, it's a very diverse and fragmented audience with lots of different challenges. Our first product is focused is a layer on top of prepaid debit cards, which are focused on, initially we were focused on prepaid debit cards issued through the employer channel, of which there's about, call it 5 million people that get cards from Coke and Pepsi and companies that have unbanked workforces. From there, we moved into the public sector where the government, the U.S. Treasury, and also all the state governments use these cards to disperse funds for Social Security, child support, unemployment insurance. There's, food stamps are all issued on prepaid cards. About 50 million people get food stamps, so that's a huge, huge market. And then our third focus, it was on what are called general purpose reloadable cards. So those are the cards that are distributed online or at CVS. Very high there's a lot of actors in this space, a lot of very good actors. And so we act as a layer on top of those products to help those program managers increase adoption, usage, engagement, and retention on those products.
We've got a video from your website, which I think may explain this a bit better. I hope this works.
Hi, I'm Tim. I work at PayPerks, and I'm here to tell you a little about what we do. PayPerks is a sweepstake-based award program for prepaid cards. The same way credit cards offer their own reward programs, our prepaid partners offer PayPerks as an award feature on their cards, giving cardholders an easy way to learn more about their cards and the chance to win cash prizes in the process. PayPerks is and always will be free for cardholders. So how does it work? As a PayPerks user, you'll have access to educational content and ways to earn PayPerks points, where each point is equal to an entry into our sweepstakes. Once you securely add your prepaid card, Your entries will automatically be entered into PayPerks sweepstakes, and you'll unlock additional content and points earning opportunities for your card. As you learn about safer, more convenient, money-saving ways to use your card, you'll increase your chances to win one of thousands of cash prizes each month. And if you're a lucky winner, we load the prize directly onto your prepaid card. Today, PayPerks is already being used by hundreds of thousands of people across the country to help them make better financial decisions. PayPerks was created with the goal of helping people better understand and get the most out of financial products and services. We add new content each month to keep the site filled with the most useful and up-to-date information. To learn more, visit us at www.payperks.com.
Now, you've got some slides you want to take us through. Do you want to take us through
Sure.
some of the stats? Shall I do the honors?
Sure. So how familiar are folks here with the underbanked financial services landscape? Is it redundant to sort of go through these slides a little bit, the market a little bit? Okay, so the data that we're looking at here is from the FDIC, so it's based on census data, and this is just to show that, of the U.S. population, 34 million households are and underbanked. That's 28%, or about 68 million adults. That's this slide, yeah.
Oh, next slide?
Next slide, yeah.
Next slide.
And it may be surprising to some folks, when we first started this business, the first question investors said was, how are you starting like a tech company for these folks? But it was surprising that these folks do have mobile phones. In fact, they sort of over-index on mobile utilization versus other, general population. One of the main reasons is that a mobile phone with internet connectivity is somebody's primary connectivity device to the internet. So it's more likely, if you're underbanked, you're more likely to have a smartphone and a mobile phone than general population. And you're also more likely to use financial services on a mobile phone. A lot of these are prepaid card apps, remittance, payments, but a lot of this is all payments. And this is just to show that the market is growing. There's a lot of reasons for this, a lot of regulation reasons, but the market is consistent.
Why is regulation allowing it to grow? What's happening?
Well, if you think about payments, for example, as just one sliver of this market, Durbin, for example, caps interchange on traditional debit cards, which disincentivizes the banks to keep people's deposits and offer them debit cards linked to those checking accounts.
Right.
So it forces more people out of the traditional financial mainstream and onto alternative products like prepaid cards.
Right. Okay. And your last slide?
Yeah, and this is just to show, how we think of the market. So this slide, I should have a footnote here. This is from CFSI, which is a great organization that does a lot of research on this market space, and Core Innovation Capital, which is the venture arm of CFSI. And every year they do a market sizing study on the size of this space, and they break down, by segment. So you see here the big categories are very short-term credit, and short-term credit payments is a smaller piece, about $9 billion spent annually on payments, deposits, and then other things like tax prep. So right now we're at PayPerks very focused on the payment space, particularly the prepaid card categories. But thinking about payments as the hub of a lot of wheels and the core. We think of the prepaid card as the core. The prepaid card is to the and underbanked consumer what a checking account would be to a banked consumer. So the hub of all financial services activity that would eventually be linked to that underlying prepaid account. So if you think about short-term credit, eventually credit would be loaded onto that prepaid card. So prepaid cards are our entry point to this marketplace, and a very scalable channel to reach users and have a lot of impact on their day-to-day lives.
So the prepaid card is a bit like a personal current account in a sense.
Prepaid, so there's lots of different types of prepaid cards, but the ones we're talking about are typically network branded, reloadable, and open loop cards, right?
What's open loop?
meaning you can use it anywhere, not just at a store, right? So not a store branded card. So they come with a Visa or MasterCard logo. American Express also issues these cards as well. You can use them anywhere. If you have a MasterCard logo, anywhere MasterCard is accepted. For the most part, these are very high functioning, low cost solutions for this segment of consumers. So I'll give you 2 use cases. One is I work at Coca-Cola. I don't know if Coca-Cola has a payroll card program, just as a disclaimer, but I work at Coca-Cola. They give me a payroll card, probably from a good issuer because they have good relationships with banks. Over the course of a year, I'm likely to save about a week's worth of salary over the course of that year from switching from a paper check to a prepaid card. I can use it at the ATM to take cash out. I can use it at the point of sale to swipe to make a transaction. I can use it online. I can sometimes give a family member a companion card so that they can, I can put 10% of my income for them to use it. So really high functional, low cost solutions for folks in this segment.
Now, the prepaid card's a physical thing, right?
Looks just like a debit card that, yeah.
Can that turn into an app on a phone? Can it become a prepaid card on the phone?
Sure, it's linked. The card is a form factor for the underlying prepaid account.
Okay.
So sure, there's
So it
mobile
becomes
solutions.
a wallet. Does it become a wallet, basically?
It becomes a
A
substitute,
mobile wallet?
a substitute checking account.
Right.
Yeah.
Okay. Well, I have a last question, which is, where's this going to be in 3 to 5 years' time? Where do you think this is going?
Well, I think that there's still a lot of consumers still using cash. So the payments piece of this is likely to continue to grow
Right.
as more checks are eliminated, and hopefully this whole market will. This is fees and interest revenue, right? This is fees and interest paid. So it's still a very inefficient market. So I would hope that the total numbers here would actually shrink over the next 3 to 5 years as the market becomes more efficient, and people don't have to spend as much on a per person basis.
Right.
Then
Okay.
right.
Okay.
But I also think that there will be more people entering this segment. So who knows what will happen with regulation, but it's likely that more people will be forced out of the traditional banking system as the economics of that change, and more people will be reliant on alternative financial services.
So you say that the costs are going to drop, basically. It's going to get cheaper to use a prepaid card.
Yeah, it already has in the last 5 years become much cheaper to use a prepaid card, so I would imagine that the same thing would happen in the credit landscape over the next 3 to 5 years.
Will there be additional innovations in the way prepaid cards work? I understand, okay, so it gets cheaper over the next 3 to 5 years as it becomes a more efficient value chain.
Yeah.
But what about other innovations around prepaid cards?
Of course. So there's there's a number of issuers who are very sophisticated and always launching new features. A lot of the feature development is driven by regulation. So right now, there's a lot of ambiguity about whether you can link credit to a prepaid card. The CFPB is looking closely at these issues and has scheduled a notice of proposed rulemaking in the spring. So I think when they give more clarity on what will be allowed, the program managers in the space will be ready to respond with new features. But there's a lot of innovation happening in this space with things like savings pockets. So if I have on some prepaid cards, I can set my defaults to put money in savings every month and keep that money separate and earn interest on that account. There's a lot of mobile apps, right, where I can manage my money, and PFM tools and couponing and all the things that happen in more mature card spaces are starting to happen in prepaid, but it's just a more nascent space with more scrutiny from the regulators because it's dealing with a more financially vulnerable population.
Right. Okay, thank you very much. Do we have any questions? Let's run the mic.
Hi, I'm Ben. I'm from MasterCard. So question, do you have a mobile experience, a mobile app? And if so, what percentage of use do you see on that versus traditional desktop?
So we don't have an app, but our website is responsively designed and optimized for a number of different mobile devices and browsers and everything. It's actually interesting. So we launched the platform. We've done a number of pilots with MasterCard and other folks in the past. We launched the platform at scale in April with the US Treasury with at that time, about 20% of our users were coming to us exclusively from mobile. Right now, we're seeing over 30%. So every month, the number goes up. Part of that's because we've optimized our mobile experience, but I think that we're seeing more and more folks coming to us exclusively for mobile.
Okay. Do you want to grab the mic?
Hi, Brian, also from MasterCard. So you just recently raised Series A. Congratulations. What are your plans for growth, and what do you see as the biggest obstacles for that?
So we have we've already sold a lot of customers on PayPerks. It's now a lot of block and tackling to get them live. So a lot of the partners haven't, but we're live with the Treasury. That program will continue to grow, and that's public. There's a number of other program managers and issuers who are looking to launch with and get more scale with over the next year. I think by the end of next year, we'd like to have a critical mass of program managers, prepaid program managers, live on PayPerks. So that's our main goal. On a parallel track, we think that there's a lot of value we can provide in the credit space, in this short-term and very short-term credit space. We've recently hired a guy named Rob Levy, who is the co-author of he came from CFSI, to be our director of credit solutions. So we're thinking about how the assets of PayPerks can be useful in potentially facilitating credit onto prepaid, or potentially doing something related to prepaid with credit.
Should we take one more? Did Young help?
Hi, my name is Wen from Trusting Social. What we do is we provide credit score, but based on social profiles instead of credit history. So what do you see of using social data in the future to evaluate underbanked and bank population?
Yeah, I think there's a lot of interesting startups in this space looking to use alternative data to help better underwrite these consumers. I think the challenge there is getting lenders to actually utilize that data. So there's one startup I know that is actually working directly with lenders to get them to agree in advance that they will actually use that data to underwrite, which then provides more value to the consumer to actually go out and invest in building that particular score. So there's a number of startups innovating in this space. I think that there's a big problem to be solved in credit, so I think that there's room for plenty of innovation. So I'm not going to bet on whether a score, a social score is the answer or not, but better underwriting is definitely a big piece of the equation.
Okay, maybe one more.
My name's Gareth. Good to meet you. Congratulations as well on your Series
Thank
A.
you.
It's terrific, and you're New York based, I think, as well, which is
Yep.
great.
Yep.
I'm just very curious around some of the regulation you touched on that, and just how Durbin, it's up. Interchange revenue is kind of up for debate again. You guys fall outside of that at the moment. Do you feel like you'll get swept up into that? And if you do, then the cost of acquisition and the amount of money that you're able to earn from Interchange, how will that change your business model?
It's a good question. So we actually don't make our revenue directly from Interchange, so we're not directly impacted by this, but the regulation that impacts us is really more broad than simply Durbin, right? I'm not going to take bets on what's going to happen with prepaid and Durbin, but I do think that the regulators appreciate that prepaid is a unique circumstance and providing a unique value prop to a unique set of customers. And so I think with any regulation that might come on interchange, on prepaid might come with some other carve-outs for prepaid to allow the program managers to continue to operate and provide a service to financially vulnerable folks.
Okay. I think we'll call it there. Arlyn, thank you very much.
Sure. Thanks for having me.
Thank you.